What are the deal trends you're seeing in global private credit and private equity markets at the moment?
Well, right now we're seeing something of a slowdown in new private equity deals. The buyers and sellers are still in a price discovery mode with base interest rates being much higher. We're seeing a real focus on growth of existing portfolio companies, private equity firms looking to do add-on acquisitions and expansions. Sometimes they're funding these with additional equity contributions. Frequently, we also will be lenders to help them grow alongside new equity contributions. There is a real drive to keep costs under control to make sure that new investments, capital expenditures, earn a real return because interest rates are higher, and it's just arithmetic to need a better return and need to be a little bit more specific, a little bit more precise on how those funds get spent. We're also seeing increased interest from investors in private credit. You know, the banking sector has its ups and downs at different times, regulations, credit losses. In middle market private equity lending, banks in the United States really haven't been active players since 2000, since the internet telecom bust. In the largest deals, you'll see some of the big banks as arrangers of term loans selling to CLOs. But in our area, which is about 25 to 75 million of annual EBITDA, most all of the lending to private equity-backed deals is from private lenders like us. We were one of the innovators and leaders and we are one of the dominant lenders now in really bringing to that market lending with a partnership approach, but also with a sharp focus on loans that we eventually get paid back.
So, Lawrence, I think it's really significant that you're in the region right now. And you and I were talking off-air just before about how we are seeing increasing sophistication among investors here, and there is deep pools of public and private capital in the region looking for a home. So what's the opportunity for Golub here, and what actually brings you to the region right now?
Well, we've had investors here in the region for almost 10 years. I think, we probably should have come sooner. And interestingly, the first investors we had were reverse inquiry folks, major folks from the region who came and called on us asking, can we participate? Which, of course, is a great opportunity as a business person. It tells you should have been out there first, but it's a nice way to go. I think that this region has been very involved in private equity funds, setting up sovereign wealth private equity efforts. And over time, as the lending piece has become more interesting, and now especially as base rates are going up, I think there's a recognition that there's room in a large portfolio for some different levels of the risk return. We, as private lenders, will not match the returns of top quartile private equity funds on their best vintages, but it's a much steadier return, a premium return to international rates. And if you're with a good manager, I think there's a growing appreciation that by maintaining lower risk, you have lower credit losses and you have very solid returns.